What's going on, y'all? It's your boy Nick back with another video. This time we're not going to do a trade review, but more so just how to use the Fibonacci retracement tool. This is a very effective tool when trading. It deals directly with mathematics, so you want to just kind of learn more about Fibonacci retracement and see how if you can use this as part of your trading strategy. So I'm going to share my screen and let's get started. So first, I want to go over Tesla. So yesterday, I alerted everyone to get in on Tesla off this little bounce towards this area, um, and that's kind of just what happened. It bounced very slightly to the 717 at the open, and boom, we just squeezed. This is kind of an example of a short squeeze right here because this was the previous all-time high, and a lot of people took short positions here. So once we dipped down a little bit, a lot of people bought this dip, right? It bought this dip at the all-time high, and boom, as they buy this dip, you see a lot of these people who were originally short. You know they were short because look how they accumulated the positions and dumped. They dumped Tesla and made money through this dump, right? They manipulated that price action and made money here, right? So once people bought this mini dip, we know it gapped up based on the delivery numbers, right? It gapped up, people bought this dip, and boom, all these people who were short need to get out of their position. Now, short sellers, they sell shares they don't have to open a position, right? Because they want the shares to go down, they buy back for a low price profit, right? In this case, as they see the price going up, they have to get out. They have to, cut their loss and get out the position. And the only way for them to get out is to buy the shares back, right? So they got to buy the shares back, and that causes additional buying pressure from these original shorts, right? Kind of like how the sellers become buyers. So boom, we see this huge squeeze on Tesla hitting all-time high at like 742.85, and it kind of just pulled back down. Now, if you miss this entire move, it's fine. Can't catch every move. What you can do is use the Fibonacci retracement tool. Now, again, I kind of discussed this earlier, but a Fibonacci sequence is a mathematical sequence where the following term is the sum of the previous two terms. So it goes 0, 1, 1, 2, 3, 5, 8, 11, 13. I mean, after 5 is 13. After 13 is 18, and it keeps going to sequence, right? And what the ratios are on the Fibonacci retracement tool is kind of dividing certain terms based on how far apart they are from each other. It creates a certain percentage, right? So what you can do, okay, so if you miss the move and you want to see where it can retrace to, where it will pull back to, you take the lowest point here. So here on TradingView, you click this button and you click Fib retracement, right? Fib retracement stands for Fibonacci retracement, right? You click that, you select the lowest point, which is approximately right here, right? And then you select the highest point, which let's say is right here, right, of this one move, right? If you missed this entire move and you want to say, I want to get in on a pullback, where could it possibly pull back to, right? We're in all-time highs. You might not have a previous support resistance to refer to. So let's kind of check out where it could pull back to. Now, the ratios are written in decimal form here, right? The 0.236, 0.382, 0.5, 0.618, 0.786, and 1. So this all represents percentages. Just multiply or move the decimal twice to the right to get the actual percentage. So this would be 23.6%, 38.2%, 50%, 61.8%, 78.6%, and 100%. So it means at this 100%, it literally retraced the entire move, right? And part of the Dow theory in technical analysis is that every move usually has a 1/3 to a 1/2 retracement, right? Or correction, right? It'll come back by 1/3 or 1/2, right? So we really want to pay attention here, the 382 and the 0.5, right? If you go a little bit further down, the 0.5 and the 0.618, they call this like the golden zone, right? Golden pocket, right? Actually, and right here it would be the golden pocket is 0.382 and zero point 0.5. Sorry about that. Right here is the golden pocket, right? Now, if it comes down here, is a very good chance that, you know, it will continue to bounce and either retest the high or retest the next level. And if we see what happened yesterday on Monday, yeah, Monday, sorry. Got back to work this week. Monday, we see this playing the fibs very nicely. As it came down, it did retrace first here to 0.236 at 736, and it bounced. It also came right down to the 0.382 right here, and it bounced. This is why I told everyone, hey, look for Tesla to bounce at like 733 to 730, like right in the zone, right? It did bounce at very close to 733. If you got this dip, you see what happens. It retested the high and made a slightly higher high. So this move, let's say you got in the zone, which is about 733, 734, and you got out around the high, 743, 744. This would be a nice $10 scalp day trade move, right? So we're using this on a day trade time frame. So this would be more of like a day trade type of strategy. You can use this on any time frame, but let's start with the 15-minute, right? Now, if you miss this one, let's see how far it can retrace back down again. Now, it did retrace down to the 0.382, but it actually retraced to the 0.5 and in the zone between the 0.5 and the 0.618. Right here in between, you know, these two zones, this is like a good buying opportunity, right? So if you bought this dip and it kind of retraced back to the first fib, the 0.236, you would have took 730 and wrote it back up to 736, another $6 scalp move, right? Now, as it, you know, the markets dipped and was pretty weak yesterday, you know, a lot of selling occurred. We saw this retrace nearly back down to where it started. Now, I'm not saying that this would be a good buying opportunity, but I'm gonna explain another um, price action concept y'all want to pay attention to. The first one is the open drive. Now, the open drive is where the price opens and we see, boom, a clear, just straight move, right? We see clearly we got aggressive buyers just pushing this price up, right? So when the price comes down close to or to around the area of this open drive, the open drive would be 719.5. Let's just I'll mark that up with a quick line, okay? Right here, right? Boom, we see it tap this and come right back up. Why? Because we know the buyers were very aggressive at this price range, price level area, right? And when the price pushes back down, the sellers are aggressively pushing back down. They don't want to fight the aggressive buyers. That's a fight that they're going to lose, right? Because these buyers are going to buy this dip again, right? They're going to buy it. They're defending their positions. Think about the people who bought here, right? They're defending their positions. They're going to buy again and push the price back higher. And look, at near the open price, which is 719.5, pushed it all the way back up to 736. Again, that's a $16 move, right? Then it came back down, retraced to kind of this zone right here, and another one, another retrace move, another five. So this doesn't have, I'm not just showing you that just this on Tesla, but this could be used on any ticker if you're a day trader, and you can literally just play the fibs. Like, don't just, this is not a guarantee it'll work every time, but it's pretty effective tool to kind of see where it will retrace to and kind of see where it could possibly bounce to, right? You can usually, a lot of people play the 618 to the 382. When you add those two percentages, it equals 1, right? So if you play 726 to 732, that's about a $6 move, right? So that's like a good solid 100% ratio when you add those two percentages. And you can kind of just play that one bounce, right? So this is how you can use fibs on an intraday time frame for a more day trading strategy. I'll also show you how this was used on Neo. So what I did was I took profit, right? And oh, I already drew it. I'll draw it one more time just so everybody can see how you draw it. So remember, select it. If you don't have it selected, click the arrow button and go to fib retracement. click that, click the lowest point and the highest point. You can also use this gear button, and here, let's actually get the exact prices. So the lowest point here is 50.67. We just have that down. Highest price is 54.45. We're slightly off. You can use the coordinates here to make sure you're getting the exact prices, right? We want to be very precise when we trade, right? So if you miss this entire move, oh, I didn't get in the Neo, right? Let's say you actually, missed the first move. Look where it retraced to, the 0.382 and the 0.5. Nice little golden pocket, right? You can buy this dip and watch it, see this going to 54s yesterday, right? But let's say you missed the entire move. You were busy. It's fine. Here, let me fix it up one more time. 4, 5. Now, where could this retrace to? You can either get it within this zone, the 0.5, 0.68 area. It did actually dip down to the 0.786 here, this zone. And let's say I bought the dip around here, like 52, right here, right? And we saw this retrace. If you got out before yesterday's close, you could have, exited with, what is this, like a $1 profit? Not bad on Neo, right? And boom, look what happened. We retested yesterday's like open drive, right? And it did like break a little bit lower and try to fill this gap, but the buyers, like I said again, aggressively bought this up again because they were trying to defend their positions. And we see here we're trying to fill this gap up currently overnight, and let's just see how things go. I didn't get shaken out because we bought it around here. I'm not really too shook on Neo right now. I didn't really drop that bad. I expected this to kind of gap up maybe and test this for 54 today, but we might not get that today. We might see this tomorrow maybe, depending on how the markets hold up. So yeah, this is Neo. Let's also look at Apple. So this is a different way you can use a Fibonacci retracement. If you take the highest point and the lowest point from, after the move, right? After this had, came all the way back down, then you can kind of see where can this bounce to, right? And one target you can have in mind is the 0.382, which is right here, right? Because remember, as it comes down, it usually may retrace by at least 1/3 to 1/2 of this entire move. So this could be one target. The 132 could be a good target. So let's say in scenario you bought the dip yesterday and you say, hey, I'm looking for a way to get out. You can use the Fibonacci tool to see where is that 1/3 correction, where's the 1/3 retracement, and it would be right here at 131. So let's say you bought yesterday's dip at like 128. This would be a nice $3 move overnight, right? Remember this, you want to also use this in conjunction with your regular support and resistance. That's very important because you don't want to just blindly use Fibonacci. You want to also connect that with what you know about support and resistance and any current support and resistance areas, right? Let's actually go back to Neo because I think that's a perfect example of how we can use Neo on a daily time frame in conjunction with some fib levels. So let's mark up Neo, and we can clearly see this is a pretty heavy resistance right here. We see this is a clearly heavy support right here. Another resistance we can mark up is right here, right? And remember I have 52.14, and right here. Something like that, right? Let's just mark it with slightly different colors, so this doesn't look too crazy. Now, let's say we did the same thing we did with Apple. You take the highest point and you mark down the lowest point of this, like one move right here, and select here. Let's make sure our prices are exact 57.2. And then took the gear button, you go to coordinates, and then the lowest price right here. I'm looking at like right here, right? Lowest price here is 38.43. Very exact, right? So boom, look at how some of our support resistance levels actually are very similar to the fibs, right? One would be, let's zoom in actually, let's make this a little bit bigger so y'all can see how it lines up. See how um, this resistance right here is very close to this fib level, which is also very close to this resistance right here. Same with how this resistance, support and resistance is very close to the 0.618 level, right? And how our last support here is very close to our 0 level, which is that lowest point, right? So this is kind of an example of how you can use your support resistance areas that you've already marked up aligned with your Fibonacci, right? That makes things a little bit more, give you a little bit more confirmation because you like seeing areas of confluence of different confirmations of different indicators, right? Remember that Fibonacci, this is strictly just mathematics applied to the price, right? The formula is, I look at the ratios, right? It's just percentages of the entire move that you choose. So just keep that in mind that this is not like the definitive like holy grail of trading. Like this is just another strategy you can use to kind of just spot areas where price can retrace to if you miss the move, or if you see a big correction like this, where it could, the price possibly bounce back to. If we see here, it did bounce back to the 382. It did bounce back to the 0.5 and the 0.618. Yesterday, we bounced all the way to back to the 0.786. And if we break the all-time high, this fib level is the 1.272. It's basically taking 27.2% of this entire correction move and it's multiplying here. It's 57.2, 38.43. That's almost $20. Let's say that's like $19. Multiply 19 times 0.272, which is 27% of that. You multiply that 19 times 0.272. You add that product to the highest price, and it gives you a higher price target, right? So you can also use this to kind of see, hey, what could be the next price target if we're at the all-time high, or if we break the all-time high. You can use the 1.272 as that higher price target. Okay, so this is a quick way to use for me to show you how I use Fibonacci. You can use it either, like I said, to find, let's see, after the big correction, where can this possibly retrace to? So we see the first bounce, you got up to the 0.5, right? So, or you can go back to Tesla, right? If you missed the entire move, here we gotta go to the 15-minute time frame for you to see it. Or did I delete it? Oh no, I deleted it. Okay. If you missed the move, where can you get back in? When can you get in on the pullback? In that scenario, you want to take the lowest point to the highest point, right? And then zoom in a little bit more. Take the lowest point, mark the lowest point first, then the highest point to see where you can get in on the pullback. On the Neo scenario, you want to mark the highest point to the lowest point, kind of like what we did for Apple. Highest point to lowest point. And then you see, hey, where can this bounce back to? Two different ways you can use Fibonacci. Let me know if you have any questions about this. Very effective tool to kind of just play that retracement, play that bounce, play the pullbacks on the uptrend, right? Thank you all for your time. Y'all been doing great this new year. Keep it up. Keep learning, keep studying, keep staying disciplined, and you all will do fine. Leave a like, comment, subscribe. Typical YouTube stuff, I know. Let me know if you have any feedback for videos like this, or you'd like me to review different strategies. See ya.